Today, we're going to be going over exactly how I find my intraday levels, because it's one thing to find the key levels, but it's another thing to actually find key levels intraday. About 50% of my trades, you guys see, I find these levels intraday versus how I usually find my levels. And today, we're going to go over exactly that. So the first thing that we need to see is a bunch of reactions. The way that I find my actual key levels is also reactions, but these are reactions on the 1 minute time frame up to the 5 minute time frame. These are levels that react. Now, in this example right here, as you guys can see, where do we see it reacting at the most? We have this one touch right here. We have this next touch right here. Another touch right here, all reacting off of that area. So let's mark out a level right here, and we can make this a zone. So we have a zone right here. This is how I find my key levels, just the reactions right there. And what we could do is we could play either a breakout or a retest of that, or the 258 break. And that's exactly what we did. That 258 break to the downside into that 257, that's exactly how we found this key level intraday. Because on a 1 hour, it doesn't look that great, but intraday, it reacted so well, and it was in the first 2 hours of the day, which is great, usually within the first hour. As long as it reacts like that before 10:30, then I'll take it. If it does this and it keeps doing that after 10:30, then there's a lower probability, and I only want the A+ setups. So after around that 10:30 a.m. Eastern, if it keeps doing this, then I won't probably take it, but it was right around that 10:30, which is perfect. Another great example of these intraday moves is this 255. Yes, it's a psychological level, 255, but there was nothing really setting up there yet until that pre-market area, until that intraday. So it's different than looking at the 1 hour, because it could have been choppy previously. Based on these reactions pre-market, you guys can see right here, all the way right here as well, all these reactions is looking great. Then we reacted intraday as well. This is the intraday levels, right? We rejected off of that, came all the way down. The bigger the reaction, the better. We literally came up green, rejected 255, and then we went red, showing you guys that there's a lot of sellers in that area. And once we break out of that area, once we're able to get buyers over the sellers, what do you think is going to happen? We're going to explode. I think of it like a dam analogy. If there's enough water to break the dam, do you think the water, once it breaks, is just going to stop? No, it's going to flow out crazy, and that's exactly how breakouts work. Once the dam breaks, once the seller wall breaks, that's when this thing will absolutely explode. And that's how we know if we're going to get faked out right away or not, because of that dam analogy. Now, 255, we came up, rejected that again, came back down, little pullback, little H right here, went red to green. That 255, that's an intraday reaction. Number one from pre-market. Even if pre-market didn't exist, based off of this, huge move to the downside, then it recovers, rejects that, people taking profits, and we're still able to hold up. That shows you the flip of buyers in that area. The sellers stopped. They reacted at 255, showing that there was something there, and then we're literally reacting there perfectly. That's literally a perfect intraday reaction. The earlier, the better. This was in the first 7 minutes, which means that the volatility could easily bring this up alone, right? So if this happened at 10:30, it might be a little bit too slow. But because we had that flip of sellers and it came right to buyers, showing you guys that buyers are actually there, and then as well as the time of sales. And then what you could do if you missed it, right? The move happened without you. There's no FOMO. You wait for the next trade. What you could do is this 255. Let's mark this out at 255. You can play it to the downside. How do we play it to the downside? We came up. Buyers are still here. We kind of rejected a high day area around that 257. Came down. You can't really take it like that just because that's the first touch, right? That's the first reaction there. But psychology, right? This is where the logic comes in with trading. If we come up, we break high day by a couple cents, come back down, break high day by a couple cents, and then come back down again. What does that show you about the area right there? It's weak, right? There's sellers in that area. We aren't as strong as we were. So if we can't go up, the only way we can go is down or sideways. So if buyers are trying so hard to bring this up and they can't, once the sellers gain enough control and absolutely bring this down, here we go. We had the reaction there. Perfect. We come down, green to red, closes under, you're in. Or another reaction, once it closes under, you're in. 255 came all the way down to 254, then all the way down to 253. You could have played the reversal of that, and that's a reversal breakout. Now, if you go like this, you put a minus sign in front of Tesla on Think or Swim, then we go to our chart right here. You know, a lot of people have a certain like bias in their head. So to make it easier, especially if you're starting the trade and you can't see this on the opposite side, if it's just a regular Tesla instead of negative Tesla, this could also help you by showing you guys this reversal right here. You know, because a lot of people can't think about that reversal in a different direction. So Thinkorswim makes it easy, and it shows you both directions. Buyers, right? Buyers holding this area, came up, rejecting that 255, showing that there's a wall there. And again, it looked nice intraday, came down, cannot go past the sellers, cannot hold this at all. Buyers keep trying to bring it up, bring it up, bring it up. Once these buyers let it loose and the sellers lose control, guess what happens? We come up, rejecting that again, but then we went red to green. Once we held above that, great entry. 255, great risk to reward, because if we can't go down, we've got to go up or sideways. So then buyers literally showed themselves they want to come up. And then once they were able to do that, look where we went, all the way to that 253. And last but not least, same thing here at this 486. Intraday reactions. Now, it would have been playable if this was at 1030, right? But we came all the way down, reacted at this 486. Right now, I'm just showing you guys reactive areas that you could potentially take a trade on. We come down, bounce off that 486. We're reacting. Now, again, this is why I only take it if it's before 1030, because it will just consolidate for a straight 3 hours. You know, everyone's out to lunch. It literally consolidated from 11 o'clock until 1:30, which is why it's like if it's going to break, it got to break in that first 1 hour. But I'm just showing you guys a great intraday reaction. If this was before 1030, this 486 would have looked great to the downside, because we got these two very, very nice reactions. Now, if the 1 hour looks great, this is something that we could definitely play to the downside on the next day and have this level there on our watch list. But these are the reactions that I'm talking about. 486, there's obviously something there that allows sellers to like right under it, and then buyers immediately bring it right back up. There's something there at that 486. So once that's able to fully break, this thing will absolutely tank. And this is an intraday level that we're looking at. And then same thing with 575. Like, you don't have to make it that hard. I honestly think the key levels is the easiest part. It's about the execution, the time of sales, how previous price action is. But this video is all about just finding the easiest part of our plan, the key levels. 575, this is one of the easiest levels you could find. Literally, pre-market, 575 is a high. We go to the 1 hour, we check. Okay, all-time highs, 575, easiest key level to play to the upside. So let's say, for example, this came up, reacted at the 575, came down a little bit, people are taking profits, and then we come right back up. That's the exact A+ setup that I want. 575 was reacting pre-market. It's also all-time highs. It's also a psychological level. 0s and 5s are the best, and that's probably would have been a 20% trade once we break this. And now, since how well it reacted and all that stuff that I just mentioned, now we have that as our strong key level at 575 to the upside. So whenever it gets above there, we're going to take that to the upside as long as intraday looks great at that area. If you guys want me to make a video on previous price action leading up to the trade to determine if we're going to get in or not, let me know in the comments down below, and I'll see you guys in the next video. Peace.